Well, here we are, another wonderful week of the National Real Estate Cafe with Don Gatling and Gino Fronti. And the sky is falling. That's right. That's why we do this show, is to let you know when the sky is falling. Because we've been pretty on target. I don't know what happened to our wonderful...
It's over here.
Oh, there it is. Okay. This thing's been on fire now for 7 years since we started the Don and Gino Real Estate and Finance Show, which is this right here. And then we started the National Real Estate Cafe about 3 years. And we've been on target. And... we should know if the market's tanking, but we got some other people who are going to help back us up.
All right, well, let's take a look at this. So what do you mean the market's not falling apart? I haven't heard too much of this, Don, so why would you think the market's falling apart?
Excuse me, Jim. Okay, well, bottom line, a lot of people like to lump everything together, meaning we had the stock market crash. Really, it's a correction, and that's why I kind of underlined here, financial advisors have been warning us that there will be a correction. We need a correction once in a while.
There was a correction. It was a great correction, right? If you think about it, it stabilized, right? It dropped, stabilized, markets reallocated positions, reevaluated positions, looked at some of the things that they thought were overvalued and moved around a little bit. Bond prices increased dramatically to actually, if you think about it, what happened is months and months and months ago, bond prices should have been rising to keep up with the other asset classes that were outperforming bonds, and they didn't. So I call this a catch-up for bonds.
I agree. So bottom line, we just want to let you know, if people feel that if the stock market starts to lose some steam, that is at the end of the economy, therefore the real estate is going to crash like it did in the past. But here's some other factors to think about. We have Ralph DeFranco, chief economist of Arch Capital Service. He basically says it's premature to worry about the housing bubble. Typical signs are excess debt levels, poor quality loans, exponentially increasing home price. We're not talking 5 or 6, we're talking double digits on a regular basis. Rising vacancy rates, poor affordability. Yeah, you get where I'm going, right?
Yep. So I don't see any of those except for possibly excessive debt. I do see the U.S. Going ahead and incurring more debt. That's something that's on the rise, but it's not anything to panic about yet. But it's on the rise.
Because there's jobs, and now we're starting to see finally some wage inflation.
It's actually a sign of confidence, right? Because ultimately what that says is, hey, I'm willing to take on a little debt because I'm sure I'm going to be able to pay it back.
All right. I like the next one with Genworth's chief economist, and I highlighted the big part. He doesn't worry about the housing bubble. There must be widespread behavior change as well as high levels of fraud and speculation. Fraud and speculation is why we had the mortgage meltdown.
100%.
100%.
That's what really happened. It wasn't the arms, as popular belief. There was some creative product that was given to the wrong people, right? So you put the bad tools in the wrong people's hands, or good tools in the wrong people's hands, and they do bad with it. But definitely fraud was out of control back in the early 2000s, just completely out of control.
All right, and the Fitch report here basically states the same thing we agree. U.S. housing prices are on track for 5%. Or better for the fourth consecutive year, returning to historical levels in 2007. And we believe that. And the bottom line is, it's not built on speculation. It's built on you wanting to get into a home. We had 10 years where we couldn't go buy homes. Everybody wants in.
Yeah, so look, there's some investor concentration, but it's not a predominantly investor-driven market. If you think about back in the day, right, where every gardener, every mailman had 5 or 6 properties, we're not there.
Right. So the housing market's great. Get in. Yes, rates are inching their way up, but they're still near historic lows. So housing's great. Always is. And you heard right here on the National Real Estate Cafe. Get these sent right to your phone by texting NREC to the number 58885, or check us out at donandgino.com.